Hey everyone! Today we're diving into the sometimes confusing, often intimidating, but ultimately fascinating world of accounting. Don't worry, we're not going full-on tax accountant here. We're just going to break down two fundamental concepts, debit and credit. In the simplest terms, debit and credit are about tracking where money is going. Think of it like a two-sided coin. When you spend money, one side of the coin goes down, debit, and when you receive money, the other side goes up, credit. Now, you might be thinking, Sharok, isn't that just basic addition and subtraction? And you'd be right in a way. But here's where it gets interesting. In accounting, we use debit and credit to track not just cash, but also other things a business owns, assets, and owes, liabilities. So debit and credit are the building blocks of accounting, helping us paint a complete picture of a business's financial health. Stay tuned as we explore this further. But let's bring debit and credit to life with some relatable examples. Imagine you're running a lemonade stand. Classic, right? You buy lemons and sugar for $10. This is a debit to your supplies, an asset, because you've increased what you own, and a credit to your cash, another asset, because you've decreased your cash on hand. Now, you sell some refreshing lemonade for $15. Cha-ching! This is a debit to your cash, because you've increased your cash, and a credit to your revenue, income earned, because you've increased your earnings. See? Not so scary. Every business transaction, from buying ingredients to making sales, can be recorded using this simple debit and credit system. By diligently tracking these debits and credits, you, the lemonade entrepreneur, can understand your business's profitability and overall financial position. Now let's dive into the cornerstone of accounting, the accounting equation. This fundamental equation states that a company's assets must always equal the sum of its liabilities and equity. Imagine it like a seesaw. On one side you have assets, which represent what the business owns. On the other side you have liabilities, what the business owes to others, and equity, the owner's stake in the business. Every transaction in accounting impacts this equation, but it must always stay balanced. If we increase an asset, debit, we must also increase either a liability or equity, credit, by the same amount. This balancing act ensures that our financial records are accurate and reliable, providing a clear picture of the business's financial health. How do debit and credit entries translate into the financial statements that businesses use to communicate their financial performance? The key lies in the income statement, balance sheet, and statement of cash flows. These statements are snapshots of a business's financial health built on the foundation of debits and credits. The income statement, for instance, shows a company's revenues and expenses over a period of time. Remember our lemonade stand? The revenue from selling lemonade would be a credit, while the cost of lemons and sugar would be a debit. The balance sheet, in contrast, provides a snapshot of a company's assets, liabilities, and equity at a specific point in time. Our lemonade stand's cash on hand would be an asset, debit, while any money borrowed to start the business would be a liability, credit. By understanding how debits and credits flow through these statements, we can gain valuable insights into a business's profitability, liquidity, and overall financial stability. You might be thinking, why should I, someone who's not an accountant, care about debits and credits? Well, understanding these concepts can empower you in both your personal and professional life. For one, it can help you manage your personal finances more effectively. By tracking your income and expenses, similar to debits and credits, you can make informed decisions about your spending, saving, and budgeting. Additionally, understanding financial statements can help you make smarter investment decisions. Whether you're evaluating a stock or considering a business loan, knowing how to read and interpret financial statements can give you a significant edge. Essentially, debits and credits are the language of business, and by learning this language, you can navigate the financial world with greater confidence and understanding. So, there you have it. We've delved into the world of accounting, clarified debit and credit, and examined their significance in financial statements. Remember, debit and credit are just two sides of the same coin, illustrating the movement of money and resources in and out of a business. By grasping this essential concept, you can gain a better understanding of your own finances, make informed investment choices, and navigate the business world with greater assurance. Please hit the like button and do not forget to subscribe to our channel. We also want to run a series of educational videos on accounting. Please leave your comments below and let us know what you think. Till next time.